Ladies and gentlemen of the crypto space, we are live Monday, 11:56, September 7th. I remember saying at the end of August that it's the end of August, and now it's September 7th. So much is changing so quick, so fast, and at this point, it should be expected. Anyone expecting things to stay the same is just wrong. Changes, and I used to say this when I was a kid. I remember telling my father, God rest his soul, change is inevitable. It must be accepted. Anyone who doesn't expect change is in for a surprise. And what you're experiencing right now, literally in the crypto market, in the equities market, this volatility reminds me of what I used to say when I was a kid, when I was very young. Volatility is change over a period of time. And frankly, in crypto, it's a relatively short period of time. Equities, I mean, look, it took almost 10, 11 years for this whatever to play out between the global financial crisis, the GFC, and 2020, this COVID debacle. And that was a cycle. And that cycle ended back in basically, what was it, September 2019? Where the repo markets exploded, disintegrated into the non-functional financial system, and that is so this the whole financial system of the United States exploded back in September of last year. I don't know what people are thinking that COVID caused anything. It did it itself last year. So that's where we are. We're in basically no man's land. And I'm going to pull up charts, crypto charts, that says we're in no man's land. And that is exactly the same thing that can be said about the financial system. It is unknown territory. There are the smartest people in the room trying to understand what the hell is going on, but this thing is either, and it's all controlled by the dollar. That's it. So you can have great details. Who is it? Lynn? Lynn, I'm horrible with last names. Let me give you some people to follow. Let me pull up the main screen. Lynn is overwhelmingly one of the smartest people in the room and is a must follow. And watch her Real Vision, watch her talks. Lynn? Lynn Alden? Alden. Alden. Absolute brain. Impressive in all regards. Lynn Alden. Brent Johnson, Rel Powell, and this gentleman. I'm so bad with names. Um, following. Follow. Yes, Stephen Van Meter. Follow Stephen. And there's more. There's more people from Real Vision that are absolute incredible in their capacity to attempt to understand the dynamics of the legacy deprecated financial system. It would be interesting to see what how they would respond to that deprecated. Because is it deprecated? It's still functioning, but it is overwhelmingly rendered inferior as compared to what is technologically possible. So that is the point of deprecation in software. We deprecate something when there's something better and there's no reason to use the legacy system. So the only reason we're using the legacy system still is momentum, is reach, it's the status quo, and power. There will be wars before the legacy financial system is is allowed to transfer to something new. So this is exactly why anyone expecting to process transactions at a national level in anything but the national currency they're wrong. It's just not going to happen because of the billionaires and the trillionaire families. It's not even remotely reasonable to consider. That is my position. That is my opinion, and that's what I will stand by. We might see a little bit of it, but it won't be encouraged, and it will not be wide scale. I mean, unless it's just not going to happen. CBDCs, that's the way to go. That's what's going to happen for payment processing, payment technology. Let's take a look at the stream. Who's with me today? Nathan wanted me to talk about gold tokens. I remember that tweet. SB gave some good info. Do your own due diligence, everyone. That sounds like it's likely, but the point being, here's the point. We'll go one comment at a time. Gold tokens. Sure, you might get exposure to gold with PAXG. PAXG is the ticker. I would rather go with synthetics. Was it SAUX, I believe? Uh, let's see. I just go on vis-a-vis the synthetics exchange. Um, synthetics, the synthetic gold, which is based on Oracle information, synths, commodities, SXAU. That's why SXAU. So I would go with that rather than because you're talking about counterparty risk, and it's the same thing that you have when you buy a gold ETF, and you got some bank vault in Switzerland or Britain that's controlling the gold. I have no trust in anybody. Unless you're holding that physical piece of gold, you don't own gold. Not your physical, not your gold, not your silver, not your silver, not your keys, not your crypto. It's the same thing. If you don't have a physical piece of something, it's not yours. It's just risk. And the whole point of today's topic that I didn't even scream the title, it's all about risk. Risk reward. Because some shit went down on Thursday and Friday. I'm pretty sure a lot of you on the stream today think that was something meaningful. So I have some stories from 2017. I myself have been around in crypto since about 2015, and I saw what happened in 2017, and I could compare it to today. And it's the same thing, and it's playing out in the stock market, irrational exuberance, and Lewis knows very well about it. So hey, Lewis, told you I was going to call out this very well stated tweet that the major driving force in the downside currently is speculators, and I'm gonna get into this. But so here's your deal, SB and Nathan. I would go with synthetic gold, which is basically you're betting on the price of gold. This is like a futures contract, the non-physical delivery futures. Anyway, so did you buddy just nibble in the house? Sir Joe, yes, always a pleasure. John, Staff, RR, happy Labor Day. Thank you, Alan. Appreciate it from the Panhandle. I'm down here in South Florida, Miramar. Yeah. Craig, my man, always appreciated. Uh, Arginus, New York City. I used to live in New York City for my entire life, so I'm happy to have escaped. I think that's the best way to say it at this point. Pretty sure most people feel the same way, brother. Woo! Captain Weber in the house. Yeah. Happy Labor Day to you too, my friend. Kel in the house. Feel stressed before portfolio fell about 30%. So a little bit less for me. Um, without giving away full portfolio numbers, 20%, about 20%, give or take, 25%. So that's you're not out of the realm of what was about the drawdown, Kel. 30% is probably what most people experienced, especially folks that listen to me. Now, there's a lot of folks that were probably, let's get back to the main board, a lot of folks that are probably into this shit and all up on Uniswap, which is absolutely incredible tech, and some, this is I mean, there's no discredit whatsoever to what DeFi is doing. And that's what I want to hit home most importantly, that DeFi is disruptive technology and is going to disrupt the legacy financial system. But what has happened is the exact same thing that happened in 2017. ICOs, ERC20s are off the hook important. This is systemically important technology. 721s, NFTs, non-fungible tokens. This is incredible tech. But then what you have is the perversion of it. So what you had was the ERC20s in 2017 turned into ICOs, and then you have DeFi turned into fucking sushi. So this stuff will fade, and it's going to take a lot of goddamn money with it. So for now, there's 1.3 billion dollars locked in it. So this draws in, and this plays into Lewis's thought. Speculators, people that are degenerate gamblers, or maybe not even degenerate. You know, degenerate gambler is basically someone who bets what they can't afford to lose. So maybe people can afford to lose 1.3 billion dollars, but the point being is they're gambling. Now, I'm telling you right now on my stream, I have worked too damn hard for my money to gamble. And you know, if I go to a casino, I'll probably throw down $50 on a little bit of blackjack, maybe a little bit of poker, a little bit of hold'em. You see this face? Yeah, the worst fucking poker face ever. Woo, it's bad, baby, but it's fun. So anyway, point being, I have no interest in gambling, and that's interesting because crypto, and I hope maybe more legitimate traders hear me at some point. I don't consider what I've done with crypto gambling. I've considered it strategic, much the same strategy that they employ when they attack equities markets, plural, equity market, whatever. Point being, I firmly believe that I have taken a rational approach, a strategic approach, a quantitative and analytic approach, using data and metrics in my decision-making process. I have protected gains. I have assessed risk and reward. Now, I could have probably saved a bit more capital by taking a little less risk. But here's an interesting one. Be some numbers about my position sizing. For a lot of my gains, so it all started probably in March, April. Those were smaller bets, and I was able to build up a fair amount of capital. So there were probably about 10 chips here and there. And Kyber, Bancor, 10 chips turned into 10, 20, 30 chips. And then Ren exploded, but I didn't move anything out of Ren. So there's actually no capital gains whatsoever on my Ren position. You hear that? IRS, no capital gains on that Ren position, baby. So point being, there was 40 chips getting thrown around at one point, but towards the end, probably late August, mid-August, it wasn't no 40 chips getting thrown around anymore, and I was at max profit. That was an all-time high, probably about 10, 15 chips. So I was starting to take the risk off. Risk off, ladies and gentlemen. And now, anyone on this stream telling me we're supposed to go risk on? Now, I got some charts up that I'm going to show you guys, and in my opinion, now more than ever, this is where you're risk off. Now, what is risk off? Risk off in crypto is no doubt Bitcoin. That is your min risk crypto position. Now, Bitcoin could still experience a 10, 15, 20% drawdown from here, but that is your risk off position. And as we've talked about, this is a bit about outperforming and underperforming, and everything is always moving. And the great lie is that your bank account is a fixed number. So even that is moving. So the whole point is, what is going to outperform and what is going to underperform? And transactions cost money. Transactions cost time. Transactions cost a bit of your soul. So if you're going to take crypto and try and turn it into fiat, you got to go through a fiat gateway. Like I have to take crypto and send it over to Gemini and convert it to dollars and extract it to a bank account. And what the fuck am I going to do with those dollars? What am I going to do with them? They're going to sit in a bank account and do what? I'm going to watch them depreciate, the price destruction. I'm going to watch this shit. I'm going to watch my value of my dollars get destroyed. Yeah, listen, the CPI, the August CPI has come out this coming Friday, and I wrote a Twitter post a little earlier. I bet Powell front runned the numbers. He's like, yeah, if it goes over two, we're gonna let the economy run hot a little bit. Yeah, fucker, the thing's gonna go to 2, 3, 4, 5 at the CPI, the actual number that the damn Fed reports. But look at these numbers. Look at these real numbers based on real assets. Where's the list of assets? Here's the index. Let's go to it. No, that's the index. Um, See what problems with CPI. This Chapwood index hits it on the spot. I want to show you the list of items that they use to evaluate technical detail. Chapwood index items. So these are the items, actual real items. A damn martini, sweet peas, bottled water, shrimp, hotel stay, tuna. Ooh, tuna, fresh tuna, T-bone steak. Come on. This is real deal. This is how you measure inflation. Anyone who's not measuring inflation like this, the Fed, I don't know what they're doing. I can only imagine their argument because I know they're smart people, but I also know that anything other than this doesn't seem rational or logical. Absolutely crazy. So, point being, I expect Powell to have front run the CPI to be greater than 2. And he front runned it because now he already gave pre-justification for it to be running hot. And this basically means that um, they can't raise rates, and what they're going to have to do is print money because of this. If the dollar goes bull, which it looks sure as hell above the 200 EMA on the 1 hour, it's going to start crushing um, other fiats, and it's going to put a lot of pressure on domestic recovery. Weak dollar will redirect funds to the U.S. and encourage manufacturing domestically. So, frankly, the Powells and the Menucci Bucci's of the world, they want to crush the dollar. Probably more so than ever right about now. So, you know, that's the bet. And they have to crush the dollar because they can't pay this debt. They have to print. And frankly, then you got MMT, which basically means the system is running on fumes. The system is running on without MMT, the system has to deflate. So they're basically keeping the bubble inflated. So they're printing to keep the bubble inflated. And frankly, the unemployment, the problems people are having in the states, at the state level, the state budgets, they're just going to have to print their way out of this. And that was the argument that many people have given. They either and that's the conclusive argument, they either let the system collapse and reset, let the debt collapse and reset, or they keep it inflated. They inflate it away. So anyway, that's where we are, and that's what caused Thursday and Friday this dollar rip, September 1st. So that was last week, and it built, and when it broke over the 200 EMA, that's your risk-off event. The dollars will outperform these Looney Tunes investors, but they're right because of the psychology, because of what Lewis talked about, the psychology. The people that are gambling are merely literally on the psychology of other people. That's what they're gambling on. They're gambling on front running the mass psychology. Um, so we were at Kel's. Let me see where we were in the comments. Let me try to get to everyone's comments. So Kel was down 30%, and that's why. 30% is about reasonable in the crypto space, so don't worry. And Ego says relax, buy more. Questionable. We could get back to that. Fun is just beginning. True. Can't argue with that. Paul's in the house from Germany. Always a pleasure. David's in the garage. Yeah, licking the wounds. We all are. Don't worry. I'll get to how I handled my portfolio, and hopefully that'll help other folks. Craig says, cool as a cucumber. That's right. Uh, yeah, well, the bear market was for 3 years, bro. So, yeah, I think we all accumulated. Self-custody is the only way. That's right, DS. No doubt. George, my man, thank you. Appreciate it. Clicks in the house. Always a pleasure. Speculative risk versus fundamental risk. Well, um, technicals override fundamentals, unfortunately. I talk big deal fundamentals. And frankly, look, Aave is going to change everything. Ren's going to change everything. Link's going to change everything. FUD aside, Ben's going to have an impact on Link and is going to be consumed by many projects as an oracle. It's going to change a lot. Synthetics, synthetic derivatives, synthetics, crypto assets. Oh my goodness, it's going to change everything. So you still have a risk-off event. Technicals override the crap out of everything. And there you go. There's your dip. There's your breakdown. So let's get to some technicals, but let me finish these comments. Nick Mon, if XIO network pulls us off, no idea what's up with XIO. Don't know much about them. Do you see Bitcoin kicking more down? So the whole point, risk off, is Bitcoin accumulation. And what I would recommend, you should assess how well you just did over the last 2 days, Thursday and Friday, how well you did in this altcoin DeFi boom bust cycle, because it was definitely a boom bust cycle, um, by how much Bitcoin accumulated. Stack Sats, it was bigger in 2017 than it is nowadays. You want to accumulate Bitcoin. Because what the fuck? Am I going to accumulate dollars? And sure, you could accumulate gold, but that's a pain in the goddamn ass. And gold is really susceptible to geopolitical ridiculousness because it's an entrenched historical product ingrained into many financial systems in regards. So I really see Bitcoin as the only asset that's outside of the system. And frankly, it's off the radar. And frankly, it's the greatest speculative position in the lifetime, as Raoul Pal says. And for me, for a lot of people, um, it's important. It's an important thing for the world to use, accept, and bet on. And it's the ultimate speculative position because for me, it's either going to change my life, um, or I'm just going to keep working and doing what I'm doing. And I'll keep talking to you guys and gals about all these experiences. Thank you, RR. Appreciate it. Igor says, smash accomplished. Scripts in the house. Always a pleasure. Since the US dollar is inflated, then what is our Bitcoin really worth? So that's the great complexity. So if the dollar is inflated, you need to outpace inflation. So here, check it out. So if your dollar is going 10% per year, that's messed up. That means if you're getting 10% interest, you get $1 million and you're getting 10%, 100 grand a year. Are you really making any money? Because that means next year you need to have 1,100,000. You need to add 10% on to your principal to account for inflation. So, this changes everything, man. This means even if we try really hard to replace our salary, we need a huge amount of money. And those are real calculations that I run through my head constantly. Like, if I want to replace like 150 grand a year, 10%, you're talking 1.5 mil. But then you need to tack on 10% to that 1.5 mil to account for this inflation. So that means, you need way more than 10%. That means you need more than 1.5. That means it's ridiculous. So even if you wanna win the system and have money make your money, you need just a ridiculous amount of money. So all things said, spend less than you make. Focus on the fundamentals of how to win. And then we could iron out the details probably together because I'm still trying to iron it out myself. And bet your bottom dollar I'm going to do it on the stream so everyone knows what I'm going through and hopefully they could relate and share in a similar successful path. I sure as hell hope I'm successful. So, focus. What does the fundamentals mean? The fundamentals mean accumulate. Because what do I know? I know accumulating dollars is stupid. I mean, literally, Robert Kiyosaki, Rich Dad Poor Dad. I love his straightforwardness. Accumulating dollars is stupid. It's literally like the wrong thing to do. If you're gonna accumulate anything other than dollars. Period. I mean, accumulate equities, and then that. I mean, literally, like accumulating dollars is stupid. Accumulating equities is like it'll make you gag. It's like, why are you doing that? Come on. Accumulate gold. That's just a pain in the ass because now where the hell are you going to put your gold? And if you put it in custody, is it your gold? Do you actually have it? Fine, you can put it in a safety deposit box, but I don't know. The whole point of crypto is that is why it's potentially the biggest thing since gold a couple thousand years ago because it has the properties of it and it's actually manageable and maintainable and storable. And gold isn't fungible. How about that? You got a kilogram bar of gold. What the hell are you going to do with it? How are you going to break it down into smaller pieces? So nobody talks about that. Nobody talks about the gold big ass kilogram bars are non fungible. So, okay, yeah, crypto's a big deal. It's not going anywhere. This is big stuff, boys and girls. Euro is recolored dollar. Yeah, the euro dollar, Igor, is crazy. People say that the euro dollar is really the global reserve currency because of the amount of leverage put into it. You know, basically the amount of debt. So there's a quadrillion dollars in dollar denominated debt. There may be even more in euro dollars. George Gammon, YouTube, breaks it down much better than I do. Um, Much better. Okay, no, let's talk about acro. Acro's cool, macro mind. Acro is. Let's talk about three charts. I know I've been trying to hit everyone in the stream. Let's see if I can get everything in the stream real quick. Based on your charts, what's a good entry in Aave? So, two chart questions. Angus, if you do dollar cost average, 100 coins at $1 per day. Uh, I don't know. That's complicated. Just dollar cost average. There's two ways to attack these markets. Either you're really, really crafty and strategic, which is somewhat of what I pulled off. I could have done better, but or you DCA. Don't worry about it. DCA, just do. Accumulate Bitcoin, and frankly, the other, other quality assets. I would if I were you, DCA, I wouldn't DCA anything unless it has a quarter billion in market cap. You want the big assets. Dollar cost average, Ethereum, Bitcoin. At this point, Polkadot. You know, big stuff. So avoid the speculative stuff. What's your strategy for beginning a bear market? Okay, yeah. Uh, okay, so let's talk about what happened Thursday, Friday, and let's look at these crypto charts. So this is not the beginning of a bear market, ladies and gentlemen. These charts look ridiculously awesome. Um, there's only two charts that I'm following that are still above the 200 EMA on the 4 hour, which is basically Lend and Link. And Link, I think, is going to break under it. And this is brand new, just like recently. But Lend, surprisingly, uh, Lend is surprisingly above the 200 EMA. But here's the kicker. I'm not allocating anything. I am out of almost everything at this point in time. The only thing I have speculative, I have Acro, but it's in a stake position in Delphi. I got the ADEL drop, which was really cool. So someone asked me the other week about governance tokens. I won't buy governance tokens, but what what does Acro remind me of? It reminds me of KNC. So KNC was an ICO, 100% already released governance assets, would eventually turned into a governance asset for the DAO. And I think that's something comparable for what Acro is pushing for. It's already distributed. They're incentivizing with ADEL. So it's not just comp. It's not just BAO. It's not just CRV. It's already distributed. It's not like there's an emission. It's not like there's inflation. Uh, Strike. Please, someone please correct me if I'm wrong. Is there actual inflation on an acro, AKRO, or ADEL for that matter? I'm curious because I tend to avoid inflationary assets unless it's synthetics. It's another story because synthetics has such an incentivized supply disruption that it's actually deflationary. Um, so I'm out of almost everything. I have my original Digibyte position. I haven't touched it. I have my original Cosmos position. So Cosmos, you can't undelegate to a validator without like a 21-day delay. So I'm actually incentivized to not get rid of any of my Cosmos Hub assets. Cosmos Atom is a Cosmos Hub asset. Band is a Cosmos Hub asset, unless you're involved with ERC20, which is stupid at this point. Don't do that. What do I have? I have Kava and IrisNet. These are all Cosmos Hub assets, which are inflationary assets, which means you have to delegate to a validator so you can maintain your value. Albeit speculatively, the value is going to appreciate because of supply and demand principles, aside from the inflationary pressures. Everything else, synthetics, I got a bunch in escrow. CRV, I got a bunch that's vesting. Um, Loopring, I have staked. Loopring, I'm still up hundreds of percent. Crazy. And Ren are in dark nodes. So Ren is locked. I can't do anything. Down 41% on Ren. Oof. That's brutal. Oh, here's what it is. As I said, I'm down cumulatively 25%. But if you want to know, I'm up almost 300% portfolio-wise since March. Not bad. Noah, David wants to see Ren. So let's look at the charts. George, strategy beginning of bear market. We're not at the beginning of bear market, so I don't know how to really talk about that right now. Kind of running out of time for the stream, but we're nowhere near a bear market. Lend is still above the 200 EMA, as I said. Link is likely going to break down. It's below the 200 EMA, and that's pretty obvious. I wouldn't buy anything right now. I am off. I am risk off right now. Acro looks like it's going to turn 200 EMA into resistance. Um, this is, I mean, basically the 200 AMA still looks bullish. It still is, look, green guppies in most regards. And we really want to switch to the daily to start getting a bigger picture. Um, Cosmos is still above its long-term resistance for the symmetric triangle, below the 200 EMA. Red guppies on the 4 hours. Looks like it's getting pinched. Um, it's too short of a lifespan on the daily to be really significant data, in my opinion. Digibyte got hammered, but if you pull out to the 4 hour, um, you still have one heck of a. I mean, look at this. The average is somewhere probably around there. I mean, look at that. That macro, big picture, the uptrend is still quite intact. So we're definitely not in a bear market, but what we have is a systemic disruption. And what that means is we have volatility. And what that means is we have unpredictability. And I am not interested in placing bets in an unpredictable market. I'm not going to take a 40 chip, a 100 chip. What you really want is you take a 100 chip and you get a 20% rip. And then, bam, you make 20 grand. But look at this. Look at the 24-hour gains. You got nothing. I wouldn't bet on any of this. Bit shares. I'm not going to bet on bit shares. It's not even accessible. It's on centralized exchanges. I'm not going to take any risk on sushi. I don't know what the heck Blockstack is. Balancer is a governance asset. Absolutely not. Bitcoin SV I wouldn't touch even if I just wouldn't touch it. UMA is cool. I've been meaning to look more into UMA. That's clearly a DeFi accessible asset. Aave as well. But I'm not placing risks for these couple of percent gains. If I saw this do a 20% rip and it's on a 10% pullback, and basically what we had about a month ago, or maybe a month and a half ago, where Kyber and Bancor were doing 20% rips. That was it. They were just doing everything was doing 20% rips to the upside, and that's how you take 100 grand and you get a 20% rip and you make a 20 chip. I'm not doing any of that right now. There is no risk. I am risk off right now, ladies and gentlemen. I'm not playing around. David wanted me to look at rent. Let's take a look real quick. So rent is the same. This is the same thing. I tweeted about this. We're getting pinched between the 200 EMA and a previous support. I mean, look at the support. This is clearly a support right here. It's probably a little bit higher. I drew it at the bottom. Oh, it's actually pretty good. It's not that bad through the 200 EMA. So there was everything is stabilized right now. I think everything is waiting for the market to open and waiting for the dollar to push everything around because this thing pushes everything around. This is the bull in the room. This is the gorilla in the room. This is the thing that makes or breaks markets. If this thing rips up, we're gonna get hammered. Everything versus the dollar. That's what it is. It's like a tug of war, and there's nothing that pulls the dollar unless the dollar wants to be pulled. So I bet I'm hoping that they start to print um, and crush the price of the dollar because then everyone does well and everything outperforms the dollar if they start to crush the price of the dollar. Otherwise, the dollars are going to crush the price of everything, and everyone's going to be further risk off. And equities are so that's the thing. Then that's the psychology that we're talking about, and that's the bet. Where's CNBC? So right now there's a rational exuberance, which was well said, and that's exactly what just happened in the crypto market. And this is where we go risk off and we take our profits. And I was taking my profits 2 weeks ago, 3 weeks ago, up 158% in terms of Bitcoin. But let's go for the averages. So the futures open? I'm sure they are. So the futures are still, no, that's not the futures. Those are the last. I think the futures open at 6. So the point being, um, well, they're a little open Monday. Okay, we'll see what the Minucci Bucci and Powell do. Um, you know, I can only imagine what the big people in government think and the pressures that are put on different people to do different things to achieve particular outcomes. I'm pretty sure Trump's screaming at these boys, crush the dollar, crush it already, so that he could get the markets rip roaring again. I mean, that's what it is. You flood the market with liquidity, and you get the markets rip roaring, and that just looks wonderful in the news media. This is not what what the current administration wants to see in the news media. We're certainly in a bubble. No, I literally, what was it? Trump just tweeted before Thursday. Trump on Wednesday, new all-time high, 29,000 on the Dow. That's literally what he tweeted. That's, I don't even want to go find it, but that's what he tweeted. Absolutely hilarious. He called the top. He called the top. RR says, so do you go back into fiat or Bitcoin? I go into Bitcoin. So the question for me is, why would I accumulate dollars? I don't want to accumulate dollars, so I'm going to accumulate Bitcoin. Bitcoin's going to go down, it's going to go back up, and I'm not playing with the funny money in value that I can't afford to lose. Not that I want to lose this value. I've worked really hard for this value, but the dollars that I have in bank accounts are for paying bills. The dollars or the value that I have in crypto assets are for pursuing financial freedom. So I would not go back into dollars with anything that I have in crypto. My goal is for crypto to produce a recurring revenue stream that is able to sustain my livelihood without having to work. I will work because I want to work, but not because I have to work. That's my goal. Do you have a separate portfolios? One for long? Yes, I do, George. I do. Um, period. So right now I'm the vast majority long-term holds. I don't have much else to liquidate. I'll take a glance over my portfolio. I'll wrap up the stream in a couple minutes. I don't have anything that I would liquidate right now to accumulate my Bitcoin position. Um, Yeah, that's about it. So gambling, see, gambling, I really like the DeFi because I have no interest in keeping my assets on a centralized exchange, and I really loathe the deposit and withdrawal process. In fact, I loathe it to such a degree that I won't do it. And I'd rather pay $150 for a transaction, 2-3% on a transaction, than go through a deposit and withdrawal process because it's just stupid. And I've done very well this crypto season, so to speak, this DeFi cycle uh, with those expensive transactions. Um, so yes, I do have a very separate uh, thought in my mind for assets that I keep long term versus assets that I am willing to liquidate and I'm looking for a profit on. Now, bear in mind, there's also a gray area because there's assets like Bancor and assets like Lend, which is going to get converted to Aave sooner or later. Assets like Kyber that are highly deflationary, that I can't own. And it's very frustrating. You can't always own the things you want to own. And that's the truth. Um, there's too much volatility with them, there's too much risk, and I must be out. So there's a gray area with assets that you hold long term and assets that you're gambling with. There's assets that you're gambling with, like, sure, I probably bought a little bit of sushi, but I held that for like 5 minutes. The amount of risk on this thing, this is you guys don't even want to hear the fundamental analysis on this garbage. Hey, this is just pure garbage. Don't do it. Don't do it. Do it for a half an hour to say you did it, and then get out. This is this. It's not even worth it. It's not even worth. Um, it's not even worth the damn transaction fees. Don't waste your time. Garbage. George, for trading, which is hard, use a stop loss. Yeah, stop loss, protect your gains. Protect your gains. The whole goal here is to accumulate something. You're not accumulating dollars because dollars are garbage. Accumulate Bitcoin, accumulate Ethereum, and at this point, probably accumulate Polkadot, but Polkadot is more speculative over the coming years. Bitcoin is a risk off in crypto because it hasn't ripped, it hasn't gone parabolic. And Bitcoin will go parabolic over the next 1, 2, 3 years. And I bet my bottom dollar that the parabolic move in Bitcoin is going to be so face melting because of exactly what you're seeing in the equities markets, the irrational exuberance, the bubble territory, the speculators. It is going to be such a blow off top that I think it's going to blow the minds of even people that have the biggest bull calls for Bitcoin. 4, 5. I wouldn't be surprised if we get to $750,000. I wouldn't be surprised if it is a massive, massive number. But bear in mind, excuse me, let's pull up the Bitcoin chart. Let's pull out to the weekly. Bear in mind, it'll be a blow off top. It's going to be 750 grand, but it's going to be there for like a day, and it's going to start selling immediately. But I wouldn't be surprised if we see an absolutely massive, massive blow off top because if anything, this shit, $1.3 billion locked in sushi, it proves to us that the market is irrational. Where is Lewis's tweet? Oh, where is it? It's all speculators. Don't trust the market. Don't trust speculators. Don't gamble. Protect your gains, and this shit is going to get really irrational. If you think you've seen irrational, strap in, ladies and gentlemen, because you weren't maybe not around for 2017. Craig says, important thing to have a goal, understand your personal parameters, develop a strategy, and achieve said goal given your personal parameters. No one strategy will get you there. Everyone needs to develop their own personal strategy. What works for me cannot work for someone else because it works in my mind. It needs to be a strategy that is actually a manifestation of your thought process, of your personality, of your tendencies, of your choices, of your behavior. Lewis is absolutely right. Craig is very smart and does excellent TA and has excellent ideas that he posts on the Twitter. Okay, ladies and gentlemen, let's wrap this up. Peter Schiff's talking about Bitcoin. I like his gold. I love his irrational bullishness for gold, and gold's going to go huge, just like uh, bunch of other folks, 15, 20, 30, even folks saying 40, 50, 60 grand gold if they go to gold standard, how much the price of gold needs to be in order to account for the quantity of fiat. But he's just off with regard to Bitcoin. Anyway, 12:41 on a Monday, September 7th. Thank you everyone for joining. It's always a pleasure. I know it's a holiday, so I wish everyone a really great Monday. I'm going to be back at you tomorrow on Tuesday, and we're going to keep the party going because that's what we're doing. Make the best decisions possible. Y'all have a wonderful day. Peace.